Hey guys, welcome back. Today we're going to break down a couple of trade signals I sent out to our group yesterday. One of them ended up not tagging us and running, so we had to adapt in the moment and take a trade further up the leg. Stay for the whole video. I'm going to show you how the trade that didn't tag me could have been caught had I seen DXY earlier, as obviously we can trade the DXY against any US currency, especially Euro, since Euro makes up 58% of the basket. So right off the bat, if you already haven't subscribed, definitely subscribe. The first thing I want to talk about here is this push down. This is CPI. This is following the same momentum that we've had for pretty much the whole year. This is following the momentum NFP set out. So right now we're still in that bearish retracement. We have dollar strength. So overall, the higher time frame is bearish. However, after a big push like this, the expectation is a retracement and a continuation. So I knew there was a high probability for the price to go up this day. Most of the story came off the lower time frame due to how small our ranges were, and I'll explain that in just a second. So basically, our whole story started on this previous day's low getting taken out. Once this previous day's low gets taken out, we basically have to go dissect the lower time frame. And before we do that, I want you to make note of this high. And for those of you that have watched our previous videos, you'll know these are inducement highs. Whenever a high just goes through something like that really quickly, more often than not, the high itself is a liquidity point, meaning it's actually the first target to take out when we're seeking liquidity. From the lower time frame perspective, if you actually investigate what happened, you can actually see that this high failed to take the low out. So here we actually created equals. So now you kind of have a bit of a dilemma. Yes, this is an inducement high, but ultimately this is all one push to take out these lows. Ultimately, this is your higher time frame high. So you basically have TP1, TP2. For me, I can tell that by the amount of liquidity we built, this isn't sufficient to cover the liquidity we've built here. So to me, at the very least, all of this liquidity will take this and this to meet our equilibrium point. So order flow is obviously up. One thing I want you to notice is how small and tight these ranges are. This is telling us that we should be very conservative with our targets in case the market does want to just take one of these liquidity points and reverse. Obviously, by the time we came in the next day, we seen price kept going up, and price is still actually going up. But in the moment, with what we had, the most sense made to just aim for the nearest liquidity and see what else the market brings us. So right off the bat, we have this order transfer zone, our OTZ. And essentially, all we're looking for is this liquidity-induced trap to get hit. And we can basically take a trade. So I ended up throwing a limit on here. This limit actually just got missed, and price never tapped our lit. But I'm going to show you how I could have caught it. I literally seen what had happened about 5 minutes late, and unfortunately I was unable to catch it. So if we just look, price kind of missed my limit. You can see price came down one more time, and then price kind of shot up. At this point, I was kind of like, okay, well, I'm going to be patient, keep my limit on. If we just scoot over to DXY here, check out what the same price action does on the DXY. And this is totally a valid trade. If DXY hits your point of interest, Euro USD doesn't have to. So ultimately, DXY did this. By the time I noticed, it was a bit too late. So unfortunately, I had to let this trade go and wait for another setup. So Obviously, if I seen this, I would have just market executed here and covered a little lower. It would have been less R's, but we would have at least been in the move. But anyway, yeah, it's just one of those things. We still believe in this move going up, so we just don't chase this on the 1 minute and look for a poor entry. We wait for another 5 or 15 confirmation to set up. And here we get one. And this was lit off the 15 minute, by the way, if you're wondering why it's there. It's the body that broke our OTZ. So you get the same thing here now. Only this one I pulled off the 5 minute. So for me, it goes daily 1 hour, 15 minute, and 5 minute. And obviously, the higher the time frame, the better. So you can see where our body break is. So our liquidity induced trap is where I have this line drawn. So I can basically go down to the 1 minute and see what price does. Price comes down. Now, because I still believe in this move, I know that I can basically execute this and go to the same target. Now, I don't choke my trades, so I actually ended up taking like a 5 pip stop. I think this was only a 2R. Unfortunately, I missed the better trade, which was almost a 4R, or maybe it even was a 4R. But yeah, had I caught that, it would have been two trades running TP. So ultimately, this went right to TP, no problem, and that's about all there was to this day. Obviously, price kept heading up the next day. I don't like trading too late in a session, and I also don't like swinging for the fences when I don't get a good entry. So if I did want to hold, I'd want to hold either from the lows here or the lows here. I don't like holding these positions. Reason being is they're always the nearest liquidity. So if we go back to the 15, we quite literally left liquidity right here. So if the market needed the nearest liquidity to continue, it would just do something like that. So that's why I never like holding these positions. Yeah, it was a very unfortunate day, but we ended in profit. Plan was followed. The logic was all there. But yeah, hopefully you guys learned something from this video, and I will continue making these, so make sure you keep tuning in, and I will see you guys in the next video.